Good morning, traders. I hope you're doing well this fine Thursday. Morning to, who shall I go first this time? Morning, Steve.
Steve. Good morning.
I'm going to have to toss a coin each day now to see who goes first. You put that in my mind now.
Morning, mate.
Are you doing all right?
Very good, thank you. Very, very good.
Good
And
stuff,
you?
Kay. You all good?
I'm here. Yes, good morning.
Good stuff. All right, well, let's crack straight into it. Let's get through all the hard work today. PBOC, they fixed a low rate again versus expectations, expected to fix at 7.2540. They fixed at 7.2208, so just 100 pips, give or take, above yesterday's fixing. So keeping the downward pressure on the rate there. Chinese banks were intervening again this morning, apparently, though not having quite the same effect as they had previously. We've had it bouncing right back again. So not doing the intended work so far, but we need to see if they're going to continue with that and put a bit more pressure on. We did get another bounce back up towards the highs again. Haven't quite broken the highs as we saw yesterday, but it still keeps things ticking along. Again, we don't know if they're just applying the brakes or sticking a big barrier in front of things to stop it altogether. For the moment, it looks like applying the brakes on that, but the market holding, give or take, holding where it should do. You know, take out what's going on here. We're roughly holding on to this 724.25 area. Which would give us a bit of a springboard to take on those recent highs and maybe have a little shift up to the 730s and up to that 728 number, which is a big area we've been highlighting before. We can look at that in more detail in a while. Moving on to Japan, and we'll get through some of the data that we had out. Retail sales in Japan coming in better than expected year on year. 5.7%, month on month 1.3%, both higher than last month and than expected. Large retailers is the month on month number for that one. Also in Australia, retail sales as well coming in a positive 0.7%, beating expectations. So good numbers from those guys as well. As you can see there, we've also got the German regional numbers. We are entering June CPI data dates, particularly from the Eurozone and others. North Rhine kicked it off in the German regionals with a big jump, 5 pips to 6.2% versus 5.7% prior. These numbers are reflected in the rest of the German regionals, as you can see there. Big jumps in the annual numbers. Now, there are some they're calling it base effects. This is to do with this time last year, the German government offered transport subsidies like reduced train fares and things like that, which subdued inflation data for those periods. I think June through August, I think it ran for. And so that's why we're now seeing these higher year-on-year numbers, because they've obviously washed out. No transport subsidies, prices are higher than they were last year, hence the jump there. So the market is pretty much brushing that off under the rug as nothing to worry about at the moment in terms of inflation pressures, i.e. these base effects will themselves wash out or should do over the months ahead unless something else comes in to affect them. Spain CPI as well, pulling back. Finally, back under 2%. If you think that that's the ECB's marker, the Eurozone measure there, 1.6%, a big fall from the 2.9% prior, though a pip higher than expected. Same for the Spanish CPI number, it dropped to 1.9% from 3.2%. Big drop, but higher than expected as well. The core number for Spain, which not printed in many places, showing the stickiness. It was previously at 6.1%, came in at 5.9%. So only a 2 pip drop, was expected to drop by 6 pips to 5.5%. So core number, which is what everyone's going to be looking at, still holding pretty solid there. While we're sticking with the data, I might as well tick on to the UK stuff. Mortgage approvals, a decent jump there, seeing further recovery in mortgage approvals there. Total mortgage lending was expected in fairly weak. It came in at minus 0.9 billion on that number there. Some expectations had it down $500 million, although this expectation had it up 0.1 billion. Others had it down $500 million, so not as bad as expected. The consumer credit numbers from the BOE a little softer, 1.44 billion versus 1.5 expected and 1.51 previously. I always look at the breakdown of this number to see how much is going on credit cards and how much is going on personal loans, car loans, that sort of thing. The split was lower. Credit card spending or credit card borrowing was down to 600 million versus 700 million previously, and obviously the other number down as well. So no red flags from UK consumers getting into trouble and having to hit the plastic to pay for stuff, which shows that, and as we saw from the latest retail sales, the majority of people are weathering the storm in regards to the cost of living stuff that's going on. It's putting a squeeze on, but people aren't yet reaching for emergency measures like increasing debt on credit cards and stuff like that. So no red flags there. BOE's Peel came out and said that forecasts might be a poor predictor of the outlook, which is no shock to me and a lot of people here, hence why forecasts from these guys usually aren't worth the paper they're written on. SMB's Makeler said that long-term inflation expectations have remained anchored below 2%. Growth this year is subdued, but doesn't see a recession. So that's going to reduce any expectations for further SMB hikes. Their inflation still remains pretty low, not joining in the rest of the squad in seeing higher rates. A bit Japan-like from those guys over there. The Riksbank, they hiked rates by 25 pips to 3.75 as was expected. They forecast that the policy rate will need to be raised at least once more this year. They've also increased QT. They're going to increase sales of bonds from 3.5 to 5 billion kroner. Now, they've also undertaken to, and I'll read it from the statement, within the framework of asset management, to investigate the conditions for reducing the currency risk, where one possible measure is to hedge part of the currency reserve. The starting point is that the amount that is currency hedged corresponds to roughly a quarter the size of the currency reserves. Okay, I'm going to bring you in for this posh way of saying intervention, isn't it? Because they've been moaning about the currency.
Yeah, so that was the move post the rate decision. So the rate decision, nobody was impressed. If they would have wanted to show something, to show some, how should I say, adversity towards what's happening in the Swedish krona, which they have said in words before, they would have probably done 50. So the krona weakened straight away, 0.5%, and then when they came out saying that they would, well, in other words, do some interventions, then it strengthened about 1%, but now we lost it all back again. They have about, well, they said, if I recall well, 420 or so billion stocky in foreign reserves. Let's give and take $40 billion. Let me see if I can find it. Yeah, FX reserves are around, around that 400 billion stocky. So yeah, give and take $40 billion. So they would be ready to sell $10 billion equivalent in the market, but the market is just shrugging it off. You know, it looks like Swedish krona will need something different, and I don't know what to make it strengthen again. But anyway, after the fact, the market is really not impressed with the Swedish kroner. And let's not forget, we are trying to break all-time highs here in Euro Stoxx. These are really all-time highs. And that shows you how weak the Swedish kroner is right now. Its cousin, the Norwegian kroner, is also still very weak, but perhaps we can have something different there tomorrow morning when the Norges Bank will announce their FX operations for July. Yeah, but I've got little else to say. That it's a bit a difficult one to start buying or selling Swedish kroner here because it's been so weak. But it's just one of those trains. It's tough to stand in the way of it, you know.
Yeah, very much so. If you do stand in the way, you've got to pick your spots, and you don't want to be sitting in it too long, and you need to take your money off the table when you can. I think in this one, it's pretty clear looking at the long-term charts what's going on there.
Yeah, there is no real spot unless you start to look at extensions or so.
Yeah.
I don't know where your stop should be. Honestly, I really don't know.
No, I mean, as you say, we have made that fresh high up there. You know, the only time you maybe look to short is if we have another attempt doesn't quite get as high as that, and you start to see a bit of price action showing that there's a bit of a top coming in. But then again, you know, that's just probably for the scalpers. You're not going to want to sit in the position for too long, I don't think. But anyway, moving on from that one, we had obviously the big powwow yesterday at Sintra between Ueda, Lagarde, Bailey and Powell. It all roughly passed without too much market moves going on. The underlying theme was all of the banks were pushing their mantra that we know of late. Ueda saying that still expects inflation to come back down towards 2%, or doesn't have confidence that it will remain where it is at the moment. Powell obviously pushing the expected to hike narrative as per the dot plots. Lagarde doing the same thing, saying a July hike is in place if the base case remains. Bailey looking like the bloke who's just fallen out the pub at 11 o'clock at night and doing his usual buffoonery in waffling around. But just going into some of the comments, again, repeats from Lagarde saying they still have ground to cover. Powell said policy hasn't been restrictive for very long, and it wouldn't take moving at consecutive meetings off the table. Now, Ueda was pretty interesting because this is the first real time many of us have got to hear from him, see his manner, particularly speaking in English. And he started off a bit slowly, but he soon warmed up a bit and cracked a few good jokes throughout that as well. But he said underlying inflation is below target. But he also said that wage inflation consistent with inflation target is well above 2%. Said the yen is influenced by many factors, and then made a joke including other bank policy from these guys, pointing to his colleagues. Now, what he was talking about regarding potentially when they might quit easing, sticking to the line that, as I said, in the second half of the fiscal year, he expects inflation to come down below 2%, but the outlook thereafter is a bit more unsure. They do expect inflation to pick up again into 2024 and that fiscal year, but he said he's not sure how or if that will happen. But he said if we become reasonably sure about the second part of our inflation forecast, that would be a good reason for reconsidering a policy change. He also said the economy is going to expand slightly above the potential for some time. It was all the panel was quizzed on banks, and so was he, particularly sort of bank resilience in Japan. And this was the standout line from him yesterday. He said that banks are okay now, but may be a different story if the BOJ starts tightening rates, as they may tighten up by large margins. Now that was a bit of a hint. If they are going to start increasing rates, they're not potentially going to go a softly approach. They're going to hike. I would say big for them is in 25 pip clips as opposed to 10 pip clips. But they did say it will be going up in large margins. Obviously, it's early doors. We don't know what's going to happen, but that's a little bit of an indication of how they intend to raise rates potentially moving forward. Did you pick in anything, guys? Kay, Stel, regarding particularly Ueda, as that's the first time we heard from him?
For me, well, I'm just going to comment overall, not just for Ueda. So the comments we got were, and we have to be careful to see the words that they're using, because I was reading and listening to what Paul was saying, and he's saying that we still have a long ways to go to bring inflation down, and inflation is above target, and this is all, of course, true. The question is, do we still have a long way to go in terms of tightening? And he did mention that nothing's out of the table. There, consecutive meeting hikes are still on the table. But I have this feeling that, they're talking the talk, but if data continues to weaken and inflation continues to go lower, I think that they can very, very easily change that, because let's face it, this is talk. It's not action. So, my takeaway from yesterday was that, yes, they're all obviously concerned about inflation not being a target, and that is a fact. And they are telling us that, if data warrants it, they will continue to tighten until it does get to target. But I think that the overall trend is still there, again, with the exception of the UK, which I think needs to do a lot more in terms of tightening. But Eurozone, the US, okay, Japanese inflation is not high at all. But I think the direction is still in the right. Sorry, the trend is still in the right direction. So they are telling us all these things, but what remains to be seen is what they actually do. And the big one will obviously be the Fed later in late July. Yeah. But overall, it was still a lot of talk, and you could characterize it as being hawkish, on the hawkish side. But we've had that for ages now, and they're still doing it. But the question is, what do they actually do in terms of monetary policy? Yeah, and that's what I'm not convinced about yet.
Yeah. Kay, what do you think of Ueda?
Okay, Ueda, for me, so there's a couple of things. He's leaving that mini door open, as you say. The fact that he spoke about second half of the year, inflation coming down and then perhaps going back up, I think it's whatever he does seems to be a message to governments and banks saying, like, you got ample time, but get ready. So that, in the meantime, to me, is still dovish in the way that the market expected them to act much faster. We recall that once Ueda took over from Kuroda, the market was expecting him to actually say already something in the first meeting. We are going into his third or fourth, and we still haven't got anything. So the market is pricing everything out right now. But yeah, there's this thing that when he says that they may go faster, or also don't forget that he said that in the past 25 or 30 years, going fast meant that we would move 0.2 or 0.3%. So he was making jokes about that. So I'm still not convinced that they are going to go like in several clips of 25s. First of all, they have to get out of the negative territory. They are still at officially minus 0.1%, right? So for me, the message was still half dovish, and that was reflected then in the cross yen again. But the market has done what it wanted to do, it seems. And now we are waiting for the end of month. What the rest of the central bankers are concerned, yeah, I mean, Lagarde is still saying that they are not done. She's probably right. but I would say July is baked in. September is still, what is it, 2.5 months away. A lot can change in between now and then. And Powell, yeah, keeping his same line. He does repeat those 2 hikes quite often on every meeting or talks that he had after the FOMC. It's as if he thought the market did not understand a couple, meaning 2 or more, and that it was very uncertain. So yeah, I think they all kept their lines. All right, let's not talk about Bailey. He's a waste of space and time.
I agree.
Yeah, he's probably the worst central banker well, he's in the top 3 of the worst central bankers I've seen in my 40+ years career. But again, I thought the interviewer was really good. She was really good. I mean, we see that she's in touch with markets and knows what the markets are thinking. So she was really good. So she tried to grill them a little bit. They managed to keep their fine line or their lines, but it was a pretty decent interview. And I think the markets should at least get confirmation of what we've been thinking and saying here already a good few times about the higher for longer. And yeah, that's it. Pretty good meeting, but did we hear anything new to change our minds on things? That's another story, and I would say absolutely not.
Yeah, agreed, mate. Agreed. Now, Powell's been out this morning, and one of his cool comments was saying that he's pretty much prompted what the next PCE report's going to be. Perhaps he said that US core PCE inflation likely rose 4.7% in May from a year earlier. Overall, the PCE estimated to have risen 3.9%. So maybe a little bit of a nod to the data to come. Expects a moderate pace of interest rate decisions to continue as well. So pushing the line, as Kay mentioned, also keeping that 2 hikes in the mix. Now, I would say that he hasn't nailed down that there's going to be 2 hikes. It's all 2 hikes as per what the Fed dots expect. So he's yet to get into the realm like we have with the ECB, where it's pretty much 100% nailed on that we're getting a July hike. He's still leaving the door a little bit open to a pause, but the likelihood is that we do get 2 more hikes. On the US bank stress tests, pretty much all of them passed with flying colours. There were a couple who came close to, I wouldn't say not passing, but a little less good than the others. But by and large, they've all been tested and there's no problems coming through there. What it is potentially going to bring, once the banks know if they're going to have to change any capital requirements, it's expected to open the door for a flood of payments back to shareholders. So that needs to be watched going forward. If they start doing buybacks, more buybacks, or just higher dividend payments, that sort of thing. But for the banking system in the US, there's no big problems as far as the stress tests are concerned, particularly amongst the bigger banks. So we can move on from that.
On that report, I don't know if you have seen. I've posted it in the newsroom earlier this morning about BOA's massive nurses $100 billion paper loss after big bet in the bond market. I mean, that came out right after that was an F.T. article right after the stress test results. I mean, now we have to panic for banks because they make paper losses. So I don't know. It's a bit of a strange.
Yeah. Well, as always, let me guess. Bloomberg dropped that one.
No, actually not. It was FT. Something considered as serious.
Just as bad, the FT, in terms of trying to drop in bombs. It was they got the other day. It was the Bundesbank, wasn't it, saying that the Bundesbank would need money to recapitalise, and that got denied pretty quickly by Bubba. Yeah, they're all as bad as one another. Right, so let's have a look at what's going on. So dollar yen continues its march higher, making fresh highs again today. We're getting up towards that big 145 level where there's a lot of eyeballs coming in on that. It's all about the speed, as we've told you before. We're not rushing up there very quickly. It's taken the best part of a week to do 200 odd pips, so that's not as volatile as what the MOF will be looking at, but we need to see if we get any further language changes. As I mentioned yesterday on a tweet, if we're going to get up here, I'm expecting there to be some shenanigans going on up here. You've got people who are, as I say, looking at this level as a potential intervention point. You're probably going to get a lot of front runners on that. You're going to get a lot of nerves as we get up to that level. We saw a big slap back this morning. Took it from the highs around 70 all the way down to the 30, well, much further, all the way down to 144.15 before we've had a little bit of a bounce. So the market is potentially going to get a little bit nervy up here. I haven't heard any confirmation as yet, but I suspect we're going to hear potential barriers up here into this number as well, and probably much higher up to 150, but I'll keep an eye out from that. What do you make of it here, Kay? We're still in that situation. You don't want to buy it for the intervention risk, and you don't want to sell it either because it might power on up. I mean, yesterday when Ueda was speaking, I was getting a bit twitchy. As I said in the chat room, I had the feeling of just buying yen pairs and shutting my eyes, and I got into some guppy, which I managed to take a bit off. And then I folded out the rest this morning in that dip.
I was much more traditional, mate. I bought dollar yen. I thought your sterling yen was a bit of a gamble.
Yeah,
especially.
I fancy getting a bit risky.
Yeah, I mean that was a bit of. But anyway, in the end, it worked out. I did a bit of dollar yen because it was just continuing to be dovish. Is what really made me laugh very hard was when he said that monetary policy transmission takes 25 years in Japan, because we came from 0.3 to minus 0.1 over the course of 25 years in Japan. So yeah, I bought some dollar yen, but it was just, that's the thing. It's hard to go and chase it, but being long yen, short yen pairs is still looking a bit dangerous, right? Imagine, as you say, there's some stuff going on at 145, but then it's silence all over. Then you trade 146 or 147, and up to where do you want to carry it? So for me right now, any yen position is really short term, and as the retail community calls it, scalping. I call it jobbing. And that's really it. I'm not going to think too much about what's going on here, because you buy it here, they can intervene, and you're looking at 140, and you sell it here, and they don't do anything, and you're looking at 150. So what's the use, or what's the use of taking a risk here? I'd say if you have access to options, that's a different thing. I'm actually still bearish yen, and I will be long-term bearish yen for a very long time. But I did buy just a casino chip, a put in for 2 weeks euro yen in case they would intervene. So, but that's just I mean, with a bit of jobbing, that premium is getting paid back, and but I don't want to have too much cash risk. That's for sure.
Yeah, I think overall, looking at yen pairs now, it's big risk for potentially little reward, and that's when you look at it from that aspect, you got to wonder about trading. I mean, I'm not keen, if I'm trading it, I'm not keen to have any positions open overnight, just because of that risk you're in bed, and if they decide to do something, if you're the wrong side of it, you're going to get hammered, and the same applies to weekends as well, I think. But the language still remains a couple of steps down the ladder from where they may start to look to intervene. So until we start to hear that, there may be a bit more room for this to move higher. but then they could change their tack and just come out and hit it anyway. But as mentioned, there's a lot of eyeballs on 145. And so I think people are going to get nervous. If we get up there, we are going to see some jumpy moves. If a big order goes in, we see a similar move like we saw this morning, you're going to get people thinking what's happened and then hit the button first and ask questions later. And you get a bigger move south as everyone piles on board. So it's getting very, very antsy up here. So be very careful.
Yeah, and add to that we are in end of month, end of quarter, end of half year here and there as well, and that you can have flows out of the blue which are going against the trend or with the trend. I mean, there's a lot up in the air, especially until tomorrow evening, and then July we will see where we are. It's just it's a bet. Whatever we do right now, it's not even an educated bet. It's just a bet. If we do something, we can react on a number or a statement, like Ueda yesterday on a comment. But then once you get your money, then just walk away and take it and walk away.
Yeah, exactly. Mike asked a question. There's 1 billion expiring at 127 in cable. Can it act as a magnet? No. I don't subscribe to the magnet effect of options. If we happen to be there, you may see some movements around it, because to magnet that from 50 pips up to 127 is probably going to take a lot more money than what's on the table regarding the option. Because remember, it may be a billion option, but the price of that option won't be a billion.
As an example, yesterday there was 3 billion of 109s in the euro dollar, and we just went there into the fixing. For the options expiries, there was absolutely no intention to go and even trade around it. So
yeah, and there's 5.4 billion around 106.80, 107 in euro dollar. So I don't think we'll be visiting that just based on the expiries there. But it depends where we are at the expiry. That's when you really got to look. If the price has naturally gone up there to 127 and we're close to the expiry at 3 o'clock UK time, then keep an eye. That's where you look for the opportunities. So say we get to 127 in cable at 2:30 this afternoon, 2:45, okay, and it starts hovering there. Maybe euro dollar has moved up, I don't know, 109.50, and then it keeps going, and Aussie dollar is rising. So if you see all the other pairs, they're still rising, but cable's locked in around that 127 and not following, then there's potentially an opportunity, because then you might say, well, the option is having a little bit of an effect into the expiry, some last minute hedging and moving around it. Will the price then catch up after the expiry passes? That's what I tend to look at regarding options, but I wouldn't be buying cable here just on the back of a 1 billion at 127, because magnet effect isn't that strong. And I actually did an experiment once with dollar CAD. There was something like a 4 billion expiry about 100 pips away years ago, and I said, right, well, let's have a look at it, see what happens in the lead up to the expiry. Absolutely nothing. For a pair, a 4 billion expiry was fairly big for that pair, and it did nothing, absolutely zero. So that's the lesson for that one. Look at it near the expiry rather than expecting it to do something. Speaking of cable, it had the dip to 126 yesterday after breaking through that 127, 126.80 area. It carried on going after that. Almost got down to the big figure, came up short by 6-7 pips, so we're not going to say too much about that, but close enough to the 126, and it's held. The bounce does look a bit dead cattish at the moment. If we're going to get back on the bus, it needs to get back above 126.80 in the first instance and 127 thereafter. But it's not pulled back that far either, given the bigger trend that's going on. So we're still in the running here of this bigger trend, as you can see. This, for all intents and purposes, unless it continues lower, is likely just to be a small pullback. But we've got the rest of the end of the month to get through as well. So there might still be some moves to be had over that one there. Euro sterling remains well bid up, not giving back too much after the move down towards the low 85s. Tried to having a crack through this 86, 45, 50 area, couldn't hold it back below. So that's still going to remain level. This old zone that's been on my chart forever, through 86, 45s to 70s, needs to be kept an eye on. Still, the big number above is 87, 87, 10, 15. That's still the level to beat in the more longer term. As you can see there, a big support point around there. We had the break under, it's now the resistance point. So if we're going to do something, it needs to get up there. Depends what it is. Can the euro take it up there with the guard being more hawkish? If September hike gets nailed, that might give it a bit of impetus. But also on the other side, the Bank of England, they're going to keep hiking. But how many have they got in the pipe for that one? Back on dollar China quickly, and then I'll hand it over to Kay to have a look at a few choice pairs. Still going the right way, still technically holding where it should be holding. So as I say, I'm going to expect this one to keep moving up. I'd like to see it get above 728. I'll take a bit more off the table if we get that, and then we'll see whether we get start to think about maybe looking at shorts if we get up to all these highs and hearing what officials have to say, because I'm expecting this zone up here to be where they strengthen the rhetoric, perhaps, if they're unhappy with the weakness that we're seeing there. But technically, still the trend remains in play, the levels are holding, so there's no reason to turn tail on this just yet. Kay or Stel, did you want to have a look around?
Yeah, I'll have a look around, and I'll ask perhaps Stelios for a couple of comments on the metals, and I'll show the screen. I'll tell you what I think, and then
yep, there you go.
All right, gold. I have also that level at 1900, which I've been showing already a couple of times here. I do have that level at 1900, and we are just trying. It's also around the 61.8 of the last move higher, 1905. So I think, and gold is just trying to hold. And then I want to, but it's like a kind of hold where you say, like, this looks like sooner or later we are going to have a look below. So. But I wanted to ask still, what's your 1840-50? Is it some of those? Is that the 50% that you're looking at?
Let me have a look at the chart again, because it's the 50% of the lows from November to the highs is 1841.
Yeah.
And sorry.
Yeah.
And also. Actually, no, that's the main one. But also, somewhere between 1810 and 1860, there's been some traffic if you go further left as well. But the main one is the 50% fib, and also you have the 200 DMA, which is kind of around 1855 now. So there's like a big. I mean, you can't be accurate with this, but that's roughly the area that I'm looking at. 1840, 1850, 1860, somewhere around there,
Okay. All right, then. I mean, that would probably be within reach if we start to break below 1900. It does feel like the market is perhaps a bit listless. And let's also not forget, guys and girls, that we are in the end of month, end of quarter, end of half year. And even though if it's not like official or whatever, there must be money managers who have some of their books to manage, to rebalance, to do whatever. And we may get a few moves out of the blue. So let's not forget about it. And for the time being, we have to acknowledge that that gold and also silver are trading pretty sluggish. Although I would argue that that silver doesn't really have the same look as gold, because we had this pretty strong bounce from the 22.25, but we are still below this longer term trend line here. So we are going to have to go. I don't know what is going to happen in July. It's also a prior low here, I think 23, 15, 25 is really where we have to get above again to start going. For as long as that doesn't happen, there's a few things that can happen end of month or start of next month. So have to be a bit careful with what's going on here in the metals.
Okay, one thing I want to add,
Yeah.
sorry to interrupt. I was looking at the chart this morning, which had the seasonality effect for gold and silver, actually for silver particularly, and the seasonally talking, the worst time of the year for silver performance-wise is always late June, early July. So we're there right now. The best time being February. Interestingly.
Okay.
So we also have seasonals playing against metals, and I agree with you on silver that it's looking a little bit better because not making new lows. For gold, I mean, you're talking about 1900. Greg is talking about 1900. I'm not really sure. I think as soon as we got past that 1915, 1925 area, I think that is just down towards the mid 1800s now. I don't see what can stop it. But of course, anything can happen. But I think we're now heading, $40-50 lower in gold, and well, you have to head lower in silver as well. So probably new lows there. I don't know, but
Right. Okay,
yeah.
I was just looking at the seasonalities, and it's good that you mentioned it. Look at the seasonality in February, where you go like February. Traditionally, February is the best month. It collapsed from 24 and a half
Wow.
down to 90, down to 20 in the month of February this year.
Well, maybe this year didn't work out
Yeah,
as well, but
there's
this is
always exceptions.
I think the chart I was looking at was something like a 40-year chart. So
yeah, but that's the thing when we talk about seasonalities, they don't work every year. You have to really take everything with a pinch of salt when you want to trade the seasonalities. I'm personally not a big fan of trading seasonalities, but I do just want to know what they are because people are looking at them. Okay. Euro dollar short term. Everything is going to be short term now until tomorrow night and the start of next month. Okay, because I can't repeat it enough. We do have end of month, end of quarter, end of half year, end of fiscal year in Aussie land until tomorrow. So, but in the meantime, euro dollar held kind of where it had to hold around the 108.80. There's a bit of fib action as well between 65 and 75. So that's going to be your zone, I think, on the short term to watch. If models are right, we should see the dollar on the defensive until tomorrow afternoon. But as I always say, models are one thing. What the market does or what may have been done already in the run-up to is another thing. Fact is that euro bounced off it, and also we're still seeing this kind of activity that we had every hour in the European mornings, at least, where euro crosses are relatively well bid. So we saw it over the whole week, really. And if you look at the short-term moves in stuff like if you move over and to the 15 minutes, for instance, if you look at what happens in European mornings, they always tend to go up a little bit. And again today, and we've had this the whole week basically. So euro end of month, end of quarter stuff is still mornings at least. A bit of a thing where the euro is in demand. So keep that in mind when you trade potentially euro crosses. In the afternoon, it's a different story because then the dollar takes over. But then looking at a couple of those euro crosses, here's the first interesting one. We've seen this move higher on the weaker Aussie data, but then overnight we are seeing that we are starting to cap around. We had this blowout that's also relatively short term, but it's blowout through 165.25, but now coming back below. So maybe that's a little bit of a sign that that we are seeing some kind of exhaustion, and we are seeing relatively the same thing in Euro Kiwi. I was looking at this morning. If you look at this channel, we've broken above, we tested, broken above, we tested another jump, but then when we came back in it, we went to put a low for this channel. So it has still, it's important, I think, this trend line. We stopped again dead on it in end of May, and now we are seemingly doing the same kind of similar move that we saw end of May, and this is end of April. End of June, we are doing similar kind of moves. Keep an eye on what's happening in Euro Kiwi, 180 and above. There's another day to go. We will see what happens tomorrow, but I'm starting to keep a very, very close eye on what this cross is doing into the end of the month. So this is an interesting one, in my opinion, to keep an eye on. Cable crashed through 126.80 on yesterday's quite big dollar demand, and we can laugh with it. But then Bailey was talking, and traditionally a day when Bailey talks, cable craps the bed, and we had another one of those moves. But mainly, the move was done again. The last leg was done on the fixing, printed a low on the fixing yesterday. Which was a value date month end. You guys know what's going on then, value date month end. But we are holding 125.90, 125.80, 125.80 here. This 125.80 figure is the next zone. If again, always within conditionally, if the models are right and if my own thinking is correct, I think cable should actually hold relatively well into tomorrow. But of course, there's the dollar side. We have numbers this afternoon, and tomorrow we have a couple of, let's say, minor data. The nth revision of Q1 GDP. I hope that doesn't make a sterling move anymore, because that would be really ridiculous. But yeah, my own findings are that we should remain relatively positive, or the sterling should remain relatively positive into end of month, end of quarter. So that is for the sterling. And then really, Aussie and Kiwi. Aussie dollar, we went through this trend line here. So that comes in around 66.40. I really think that if the Aussie wants to stand up for the end of its fiscal year, it has to get back above 66.40, and then it will have to wrestle with this 66, 65, 80 zone as well, if you want to stand up. If not, keep an eye on what's happening around 65.90. We had a quick look below 66 today, but then we had some mildly positive data out of the Aussie land. Yeah, the retail sales were better, well, better. 0.7%. But then also, I really don't know what the end of fiscal year flows are going to be. But keep an eye on what's happening on those fixings. They can be a real driver, and likely tomorrow into the last day of the Australian trading for this fiscal year. So we may wake up tomorrow at a pretty different level here in the Aussie dollar. Kiwi. I bought that one yesterday on the fix. Okay, it's holding, and I don't know why, around 60, 70. But the better data out of New Zealand overnight failed to hold this broken trend line. So I think the end of month, end of quarter flow, since the Kiwi is a less active currency in or major currency in investors' books, we will really have to wait for the fixing flows, and they take some time to materialize. But based on my calculations, we should find some support over there. I'm really shyly long, but I'm going to be interested to see if we can break above 90, 60, 95, 61 the figure, and perhaps put in a bit of a recovery there into tomorrow. Again, wait for perhaps the US data to hit later on today. Ryan has already spoken about dollar China. It's holding very firmly. Any fixing that that the PBOC is doing, PBOC actually injected liquidity today, so the overall picture is the same. I just went out of it yesterday, as the people in the room know, around this trend line, and also anticipating perhaps a slightly weaker dollar into month end, but of course that's my own view, not investment advice. But anyway, anywhere when the month is over and I'm seeing that that dollar China is holding well around around any of those levels, 720, 721, I probably will try to re-enter and see if we can put that last leg higher in there. Not a lot going on the rest. Yeah, South African rand. I'm not going to touch it until the month end year end. But hearing about the SARB governor yesterday, he doesn't seem to care much about the value of the rand. He did say that they will keep rates higher for longer, like every other central banker, but that doesn't alter my view right now that sooner or later the rand is likely or possibly going to weaken a bit more. The rejection sub 1850 could be telling there. And yeah, I just did like a small one, but I've got little confidence in really having like euro long. And I still think this one is very anemic. The bounces are very anemic. Just nursing a tiny short there and looking to see if I can add up towards the 19, perhaps in the new month, because I think the max carry, everything I read, investors are still very positive, and the max carry could carry on for a little bit, as they say. Ryan, that's it for me.
Cool. Thank you very much.
Something?
No, that's all cool. Not a lot on the calendar for the rest of the day. We've got the final GDP numbers from the US as well. Shouldn't make any waves, seeing as we're just about to finish Q2. Initial jobless claims, keep an eye on those, just in case there's anything wonky going on there. But otherwise, should be a quiet afternoon. We'll have pending sales, home sales at 3 o'clock today. But other than that, a fairly quiet day today. Obviously, next week we get a bit busy out because it's jobs week, so that could be a bit spicy. That's all I think for today. Thank you very much to the two guys, the ForexAnalytix chums. So see, I'm not even going to put your names first. Both of you guys, thank you very much. And obviously to all the viewers for coming to us here. Thank you very much for following the Flow Show, and we shall see you all bright and breezy tomorrow.
Have a good day.
Bye-bye.